Hello, everyone, and welcome back for episode number 22. We had a couple of weeks of a hiatus. Unfortunately, schedules didn't work out. As business owners, sometimes we get busy, and we were. So, unfortunately, we missed out on spending time with you, but we're back and excited to see you again. My name is Roger Phipps, COO and founder for Seven Lights Marketing Agency, Bird Eye View Inc., Boss Leadership Solutions, and your consultant for everything business, leadership, ops, and tech. This week, actually, we've got a special show. We get to welcome Alan back into the fold. So let's start with there because we missed him on the last show. Welcome back, Alan.
Hey, Roger. How's it going? Love the pocket square.
Thank you, sir. A little bit of Canaveral blue for our UCF Knights. Hopefully we play like that this week again against Texas Tech. So
Yes,
super excited about that. And then we're going to introduce someone new that nobody has ever met except for us. That is our intern turned producer, who is now our producer, Noah, who is a UCF student. So we are keeping in with the theme of making sure that we're helping UCF students further their careers. So thank you, Noah, for deciding to join us on this crazy ride for both shows. And welcome to the show.
Absolutely. Glad to be here.
All right. So as a true producer, he will be operating off screen.
Mm-hmm.
So we're going to drop him back out of the stream, but he's going to be interacting with you as you comment. He's going to be helping us with banners and all of that fun stuff. And this week, our topic is going to be the anatomy of crowdfunding. So, Alan, are you have you ever used crowdfunding? Are you aware of what it is? What's your experience been with crowdfunding?
Yeah, unfortunately, I'm not super. I've never done any crowdfunding myself. I'm aware of it, and I know that it's become a popular way to raise capital or raise funds. But I myself do not have any experience doing that, or I don't know any clients or anything that have done that.
Yeah, so crowdfunding is actually an opportunity for both of us as marketers, right? Because one of the things with crowdfunding is you got to get above the noise. And we'll talk a little bit about that. So I think this will actually kind of help you. But one of the big ones that people know about or have heard of is like GoFundMe
Sure.
or Patreon, right? Kickstarter is another one for businesses that people have heard of. Those are the three major ones that have a pretty solid brand that's out there. And that's primarily because like everybody uses them. If you need money for a school event, let's start a GoFundMe. If your house burns down, unfortunately, and you need help rebuilding or buying stuff because insurance didn't cover everything, let's start a GoFundMe. It's almost become lexicon within our language. But by and large, it's used not only for the average Joe, but it can also be used to raise capital for businesses. And in fact, it's something that I, in one of my companies, actually use to give access for folks that we, are targeting for investment and giving them the ability to easily convert an investment without having to go through a lawyer. Because going through a lawyer is tedious. You've got the back and forth. You've got to have conversations. And technology is at a point now where you can get investors, provide them with their stock certificates without having to go through a lawyer because somebody else will do it for you. And that's kind of where crowdfunding steps in. So crowdfunding is something that is governed by the SEC under Reg CF. And the reason you need to know Reg CF if you're going to go through crowdfunding is because there's different types of crowdfunding that fit different kinds of situations, right? And there was also different ways to pay for them. So the four different ways that crowdfunding work really are reward-based crowdfunding, which means, hey, for example, The Passion was a movie that recently used reward-based crowdfunding. And basically what they said was, hey, if you participate in our crowdfunding venture, then you get whatever your investment is. If you put a minimum investment of this, then you get the movie when it comes out for free. So they actually raised more capital than they needed through crowdfunding to build the movie, create the movie, film the movie, produce the movie, and distribute the movie. And therefore, they didn't need to use a traditional studio. And it basically it created buzz for the movie before it came out, and then people also, talked to others about it because they're proud of like being part of this thing before it started, and it was really successful for them and turned into one of the more successful movies of all time. And they didn't have to go to a production studio or limit or pay basically for that stuff. Only giving them the opportunity to use it when it came out. So basically, they funded it beforehand and sold it to those people for a discounted amount beforehand. So that's an example of a reward-based crowdfunding. You're offering some sort of reward for being an early investor in whatever it is, right? Then there's equity-based crowdfunding. And equity-based crowdfunding means that you've got a certain amount of equity that you're providing, an equity stake in exchange for the people, making the investment in you. Now, depending on how much you have, how many shares you have, and how you want to approach this, generally speaking, those are higher dollar investments, right? So if you're offering equity in the business, you don't want to offer it for like $100 investment. So you're targeting a different type of investor with that. But that's what companies traditionally do. If if they don't want to go to like a VC, and we've talked about that before, venture capitalist who their whole job is to try to take over your company, right? And they don't have large investors that are going to be able to drop millions of dollars. You can target more investors by giving a lower opportunity, but still make it such that others. This is where you're issuing debt, or you're going and basically saying, hey, for these amount of shares, we're going to provide you with, we're going to pay you a certain rate back, right? And then there's donation-based crowdfunding, which is what you traditionally think on your GoFundMe, right? So on GoFundMe, you're asking for donations for XYZ terrible thing that's happened, and you're trying to help with medical expenses or whatever. And if you consider it a donation, then there's tax implications for that because you still get taxed on this, right? There's still tax rules around it. And there's also implications when you're talking about working through, basically how you're going to distribute the funds. So that's the 4 different types of them, but they're all still under Reg CF. Now, Reg CF basically requires that all transactions under that regulation have to take place online through an SEC registered intermediary. So either like a broker or dealer or a funding portal, right? Somebody who's going to do that. You can't directly take the funds from somebody and transact it through there. You also, depending on the type of crowdfunding, there may be limits. So for example, you may, on a 506B, you may be capped at offering $5 million. So you can only raise $5 million for it. But if you get a 506C, there's different rules around that, but there's an unlimited amount of money that you can raise. So there's different rules that are on there. Crowdfunding offers there's also something called being accredited and non-accredited. Accredited means that you can verify that they have so much in income, household income, which I believe the aggregate is $250,000 for the cutoff. So the household has to make that, and they have to have a certain amount of funds. And depending on what type you do, you actually have to check that before you take their investment. That's part of your responsibility to the SEC. And then also you have to disclose those filings with the SEC and to investors on a lot of details. So there's disclosures. You have a stock purchase agreement that you're going to have to come up with. That should be done by a lawyer. Don't try to do that yourself. You're going to have to provide them with certain documentation. Now, they may have some templates, but again, always seek legal counsel because you're protecting your investment. That's what we talked about in the past. That's what we were talking about in creating things like dilution of shares and anti-dilution clauses, those sorts of things on the front end. And generally speaking, there's limitations on how fast you can resell it. So if you buy shares in a company, you generally have to keep them for 1 year, right? So you can't resell them or sell them to someone else. So let's say a company takes off within the span of that year and you're like, okay, I'm going to cash out of this. I made my money out of it. You can't do that for 12 months. So, there is a lot of regulation in it, but the nice thing about crowdfunding is you don't have to do as much of the legwork in the processing and or servicing of it. So let's talk a little bit more about the difference between the 506B and the 506C. As I mentioned earlier, that refers to the regulation that the SEC has on it. There's an unlimited amount of money. For the 506B, you can raise an unlimited amount of money and can sell securities to an unlimited amount of accredited investors. That means those folks that are certified to have those things. Now, it is your responsibility to verify those things to make it legal. However, you cannot solicit or advertise to market the securities when you're dealing with that. So you can't go out and put an advertising campaign out. You can't go out there and, when you're thinking about ads on social media or anything like that. This is typically reserved for people that have a closed network of investors that they already have access to, or that are private, that they know through their network, that are investing, and this gives them a vehicle of doing that, right? You can also, you can sell to non-accredited investors, but only 35 of them. So you cannot go out to more than 35 folks. And, basically you have to prove that you have enough financial and business acumen to be able to do that without undue risk to the people that are investing. So part of that's going to be, you understand it to a point where you can explain it. You've got the financials, like, for example, for ours, we put our financials into out there for people to see, a business case for people to see, and then also disclosures as far as, what we're going to do with the money and things about the company. All right. So 506Cs are different in that you can raise an unlimited amount of money. You can sell your securities to an unlimited number of accredited investors. However, you cannot sell to non-accredited investors. So those folks that we were talking about earlier with that 250K, in aggregate budgets, and that sort of thing, you can't sell to anybody who's below those standards. So unfortunately, there are some limitations there. Advertising and solicitation, you can do that with this type. So this is, you can raise unlimited funds. The other one has a $5 million cap. You can raise unlimited funds. You can do it to any accredited investor, and you can put yourself out there in any facet that you want. And this is where I was talking to you about the marketing aspects of it. You're going to want a website. You're going to need to have a social media campaign that you're going to put out there to build awareness, right? So this is all about awareness of your offering, because the providers that you have will provide the services, but they will not provide the exposure that you need for those offerings. We also have to, in order to provide these steps to accredit them, they're going to have to, you're responsible for checking tax returns, examining credit reports, conducting suitable due diligence, all that kind of stuff. And you can have a servicer do that for you, but it still needs to be done, and you have to be able to prove it if you're audited. That's pretty much the difference between the 506B and C. In other words, the other one is unlimited, but you can only market to specific people, but you can market. The other one is capped at 5 million, and it's basically for private, um, private networks. So that looks like I sound muffled. Okay. Let me go ahead and raise that up a little bit. Is that any better? Okay, cool. So I guess I had to pull the audio up. I'm not projecting enough, people, which is not a problem for me. Alan, did you have any questions about that? Did that explain the differences? Did you come away with an understanding of what the differences are?
Yeah, no, it's very interesting to hear about that, and I love the example of the Passion movie, and it's interesting now you do see even like this opportunity to get crowdfunding has helped, so many people, like even when you talk, I see people I follow on social media, like influencers that do skits, for example, and are trying to, get into filmmaking or acting. They'll try to drum up funds through crowdsourcing to make their own independent film. And, something like this wasn't available, X amount of years ago. And now, they don't have to, like you said, go through the major studios and things like that. They can make a film that their hundreds of thousands or millions of followers see, and they don't have to go a traditional route. So I think it's really interesting that this option is available now if you have fans and followers that really enjoy what you're doing, and you want them to keep creating and keep producing. It's a great option for that. So it was interesting to hear about, especially the financial side when it comes to when you can or cannot advertise and things like that. So yeah, I think that was a great way of explaining it.
Awesome. So let's kind of talk about how different providers like support crowdfunding, right? So there's a bunch of different ways that can be done, right? We talked a little bit about different names that are out there. We talked about Kickstarter, which is more towards investors, GoFundMe, which is targeted to, the average person who's trying to raise funds. You got Seed Invest, which is another, a company target or investor seed funding type platform. You've got Patreon, which is more for, audio or musicians or things like that, where you're creating your own channel and you're providing consistent content over time and people subscribe to it. And then there's services like Dealmaker or PitchBook. So,
isn't there some also for like niches like real estate or cryptocurrency and stuff like that as well?
Not necessarily for investing in those companies, but yes, there's basically what you've got, going back to that Reg CF we were just talking about, right? You've got a platform that has basically staked out a niche, right? But they're all doing the same thing. They're just catering to a specific type of vertical, for lack of a better term, right? It's like, all right, I'm the best country music star, or I'm the best rapper, or I'm the best gospel singer, or whatever, right? Are you Whitney Houston or are you Plies? You know what I mean? That's basically the same thing. They're all providing like music, right? But they're providing different platforms or different genres of music for you to listen to. So kind of same thing, but there are some differences in how they actually support it. For example, you have marketplace servicers. So people like PitchBook, right? So what PitchBook will do is it provides you exposure, right, to specific lists of investors that are out there looking for investments, right? And that's just one example. There's others that are out there. But they will not provide you the service. So then you have to go to someone like Dealmaker, right? Who they provide you the service, that they provide you the legal aspects of it. They issue the stocks for you. They facilitate, they'll build a portal for you so you can provide a link. Like we built our own emails, right? That we can drop the link in, and it's just for investors that we've talked to or whatever and targeted. We drop the link in and we send it to them. We're not blasting this to everyone because it's a 506B, right? Can't do that. But those folks that we talk to that are interested in it, we will send that along with the link. It takes them to their personalized portal. They set up their own login, it verifies their information, and it processes the payment for you. What it doesn't do is give you exposure to potential investors, right? So then you've got the 506Cs, which is, okay, you've got your traditional marketing where you've got a website or, a whatever that are built, right, for you to drive that back to your platform or to your website, and then they can then be processed by someone else. Okay. Kickstarter is, again, another platform that basically says, okay, these are all a bunch of people with ideas. We have a network of investors. We're going to charge you, right, to be part of this network of investors or have access to it. And basically it's paying for shelf space, right? So it's like if you were selling, some sort of cookie, you're paying Publix or that shelf space, and some of it's better than others, right? And that's the different levels on that SaaS model. Hey, I've got the basic package. You're going to be at the very, very bottom where nobody can see it if they're at eye level walking through the grocery store, right? Or you're going to be very, very high where nobody can reach it. So even if they did, look at your packaging or were interested in what, nobody can reach it without talking to someone. So they'll just move on to someone else. Same kind of thing. So again, kind of just to bring it back, you've got companies that are out there that are designed to talk about you and get your messaging out to investors or get in front of investors, right? Then you've got companies that are providing the services for you, that are actually transacting the business for you, and they may also offer the marketing along with that, right? And then you've got other companies that are just an all-in-one platform that, like GoFundMe, where you're just getting the word out and hoping people will go to your specific thing. And again, that 506B and 506C will dictate a lot of which company you decide to go with. But what you're basically looking for, all in all, you're looking for a company that's going to service your needs. Now, for those companies that are providing the service but offer their marketing, right, I would encourage you not to necessarily go with the marketing that they offer. Yes, they have expertise of what they're doing, but all they're doing is white labeling a third-party marketing company that's basically going to go out there and build you a website, provide some social media, and then put that out there. It's all templated. You're not going to get anything unique. None of that stuff is custom, right? So if you really want to stand out from the crowd, whether you're the marketplace platform, whether you're, where you're basically one of 10,000 people that think that they're investors on the marketplace platform or are looking for investors, how do people find you, right, on a marketplace platform? Well, the only way they find you is the same way ads work on Google. If you don't rank very highly for SEO, right, you pay, and then all of a sudden you're at the top of the list. So you have to understand what they're doing for you, how they're allowing you to stand forward with it. And then if you're not doing that, you're doing a more traditional sense, then go ahead and shop other marketing companies, right? They have the same expertise. It's just a different product, right? So make sure you get something custom, unique, because again, no matter what your efforts are, whether you're doing ads, whether you're doing anything else, the idea is to drive them to your website and get the word out about your investment so that your investment opportunity, so people click through. Any questions on that, Alan?
What is your experience, like having all this knowledge on it? Did you have a company that you were doing a lot of crowdfunding for, or is it for maybe you were doing the marketing like you just discussed, or what is your experience with it?
So my personal experience with it, the way that I got exposed to all of this was basically when we were looking for ways to fund or find investments for various businesses that I have. As you guys all know, I have like 25 different businesses and growing, right? And, some businesses require more upfront investment than others. For example, software, right? So as you guys know, we're doing a VR XR platform that's a separate company. Now we can do it on marketing for you, right? But we are building a VR XR experience that basically requires you to build it before you can monetize it, right? You're going to have to spend a year or two developing before you have a proof, either a proof of concept for additional investors, or you have the ability to put something out there that you can generate revenue from. So when you start looking out there and trying to figure out, well, one of the hardest things people have to do is to find money, right? So your choices are kind of what we talked about in the past on this show, which is you go borrow the money, which is going to be hard if you don't have any revenue coming in, and you're not going to for 2 years, right? The main bank that did that was out in San Francisco, actually went belly up last year. And so when they went belly up, a lot of those opportunities went away. The next opportunity is like a venture capitalist, right? And so for a venture capitalist, their whole goal in life is to buy up enough of your stock so that they can control the company. And then also they have a lot of control in how it operates. You'll have someone who's managing your company for you, right? Then you have a traditional investment set, which is, you find some investors, you sell them the stock, and you can either have Series A or Series B investment. And Series A is basically, hey, they have a controlling interest in your company. They have voting rights. Series B means they don't. They still own a piece of your company. They still, do that, give you their money. However, they're doing that for the return on investment. They're not doing it to control, right? And then lastly, you've got what we're doing, which is the crowdfunding. So it's a way to open up the opportunity to get to it. Go ahead, Go ahead, Alan. And Noah, can you do me a favor and go ahead and put the open to questions ticker across the bottom of the screen. Go ahead, Alan.
Yeah, so you talked about marketing for, which I find interesting. You mentioned websites, you mentioned ads, or maybe social media. Is there, as we know, not every marketing strategy works for every industry or every business. Have you found or seen a marketing strategy that seems to either be unique or set other companies apart in this space? Is it like, you have your must-haves like a website and social, but is there, is advertising a particularly stronger strategy? Is there something that's, really that is,
it's all about brand building. I mean, anything that you're going to do for brand building, it's really branding and advertising. So, right, casting the widest net that you possibly can, and at the same time, building a brand around whatever it is. You can build a brand around a product that doesn't exist yet, right? You can also, you want to cast the widest net possible. So the way that you do that is through, paid ads and all the traditional type of things. So when you're dealing with marketing, and you know this, Alan, there's the branding aspect of it, there's the marketing aspect of it, and those are two separate things trying to accomplish two different things, right? The goal with marketing for this type of thing is less about like transacting or turning people into dollars. I mean, ultimately that you want, but it's more about getting the brand out and getting more people to identify and getting them back to your website so they can see what it is that you're doing, and then trying to expand your network to get that investment. And specifically with crowdfunding, depending on how much you're trying to raise, and whether you're trying to appeal to, smaller investments or large investments, that's going to dictate a lot of that too. So does that explain it?
Yeah, no, that definitely.
I mean, without going into a specific strategy for a specific company, specific companies are going to have different things, right? Because you've got different demos that you're trying to appeal to. If it's a technology company, they're going to go one direction. If it's a gaming company, they're going to go one direction. If it's a banking company, it's a different direction. A fintech, a security company. You're going to target different things, and you're going to target different people in different ways. So, you might be targeting all the CISOs for something, but it really doesn't matter to the average Joe because they have no idea what information security is. So that's going to be a different, other than the times that you get the free Chick-fil-A sandwich email link and you click through and all of a sudden you're caught, right? That's the training that you get, and that's about it. So depending on that, that's going to dictate a lot of how that works.
Gotcha.
All right. So let's talk a little bit about the different fee structures, because here's something you should be aware of too when you're comparing how these things work, right? So there's multiple different fee structures that are involved. Some of them will give you the cost up front, right? And then they'll charge you for the servicing of the platform, so every time it's serviced. And then also they'll charge you, on the back end for the number of people that you put on there, which is kind of tough because if you're having to spend $50,000, $60,000 up front to set all this stuff up and you don't have any money, you've got to have seed funding already before you go out there, right? So it's a situation where in order to afford to be able to do this, you have to have money to begin with. Well, a lot of people start with no money or no capital, right? So either you have to go get the initial seed funding yourself, or you have to go with something that costs a little bit less or passes more of the cost based on how many transactions and how much money you bring in. So something like GoFundMe, right? I think it's like 39 cents per transaction, but they're hoping, since it's smaller investments, that they're hoping for volume, right, on those transactions. Whereas someone who's like Dealmaker, they're going to charge you $20,000, $30,000 to set it up. Once it's set up, okay, then they're going to charge you for processing the thing, and then if you want to do any marketing or anything after that, they're also going to charge you for that another $50,000, $60,000. So if you're a startup with low seed money, it's going to dictate which path you kind of go and what you take advantage of. So that, I hope, explains a little bit of that. Now, all that being said, when it comes to cost, right, and the fee structures, one of the things that you have to be aware of is anybody that's really, really heavily asking for a lot of money up front, you're taking all the risk on yourself, because essentially you're spending a lot of money. If it isn't successful, then, and you're not getting a lot of money in return, you're not going to make your money back. You're taking all the risk in a situation like that. However, you're going to pay less ultimately overall for the transaction. However, the flip side is true with someone like Kickstarter, which Kickstarter is going to be really, really cheap on the front end, but all you're getting is access to a SaaS model that puts your particular product or patent or whatever it is in front of a bunch of investors. But then again, you have to pay more to get those investors to find you, right? So you got to be careful with that. And then lastly, there's folks that are like GoFundMe, which charge you higher on, a higher percentage. I think it's 30 or 40%, 39 cents on the dollar, or 39%, right, of what you raise, but you have virtually no cost on the front end, right? So that's for people who are doing a seed funding. So I would suggest is understanding what those costs are. What is the right situation for you? And then, you may do a combo campaign. Let's say you do crowdfunding for the seed money to be able to pay for the larger things, for the larger investments. If your thing that you're trying to build is going to take more time on the front end, you're going to have to raise more capital, which means you're typically going to do something with a higher front end cost, right? In anything that you do when you're standing up a company, you've got to have some money on the front end to be able to put you in motion, to get you ready. for anything else if you're going to do it at scale or larger things, right? Software is that way, technology is that way. And usually what software folks do is they'll build an app or whatever. They'll sell it for, $1 million or $12 million or whatever they can get out of it. And then they'll reinvest it in something else that's bigger picture and is much more cost heavy on the front end, but is also much more profitable on the back end. Does all that make sense?
Yeah, that makes sense. Absolutely.
So be careful with the SaaS products. The SaaS products are typically low cost, but they're low exposure. So yes, they get you out there. Those are typically marketplace apps, but they won't necessarily get you dollars or get you found, right? The flip side of it is you pay more on the front end. You've got the service aspect of it, but you still have to get the marketing. So it's a higher cost on the front end, and you still have to market it, depending on if you're a 501B or C. For us, we're 506B or C. 501, now I'm thinking about my kids' education plan. 506B, right, is you're not able to market it. So there is no marketing. You're just doing word of mouth, et cetera. 506C, you're going to have a lot of cost for the marketing. Typically, it's going to be somewhere around $50,000 to $60,000 at least, just to get the website up, and then around $15,000 a month with a lot of these companies for marketing. So I can tell you this, Alan and I can do a lot with $15,000 a month, and we can build a website for a lot cheaper than $50,000. So if you find yourself in that situation, look us up. So, any questions on that, Alan?
No, I think that makes sense. Yeah, it's very interesting to hear about all this stuff. It seems like, a great option. It sounds like there's a lot of, hoops you have to jump through and a lot of, paperwork and everything, but, it's a great option.
Well, and I'll say this, those servicer platforms, right, make the paperwork part easy, because all you have to have is, a share purchase agreement, which is something that outlines the terms of what that is, right? Like what they're buying, what they're getting for it. Of those four that we originally talked about, which one is it? Are they just getting equity? Are they getting debt? Are they getting whatever? So you've got that share purchase agreement. You've typically got a document that you have to fill in that's pretty templated. That's a legal SEC filing, but they do all of that for you, right? And there is a cost to do that each time, but I can tell you it's a lot cheaper than going out there to a lawyer, especially if you have volume. All right. Next on the agenda, what are the disadvantages, advantages and disadvantages? So this is really going to go back to your ability to have access to capital and how much you need, right? If you need a large amount of capital, this is more than likely not going to be your source unless you have something that's going to be a high volume of potential investors at smaller amounts, similar to the passion that we used earlier, right? So that was a faith-based movie, right? And so they were able to tap into a large market of people that believe that faith, and they have smaller investment amounts, and they offered a reward for them to be able to be a part of this. So that works, right? They raised a lot of money with a small volume of people. However, there's not going to be a whole bunch of people, if you're inventing a new, new CISO software, right? Or new virtual cybersecurity software. There's not going to be a whole big round of people that are going to be sitting there ready to invest in that, right? Now, there are companies that do that. There are, there are bankers that are companies that do traditional investments versus lending, but that's really going to be the big difference. And the advantage is that you have the ability to put this out there to anyone. The disadvantage is you've got to be above the noise. So how do you market yourself and get people to you to find you, and then be able to articulate what you're doing in a way that's going to want to make them give, right? So to the average Joe, how are you going to explain it in a real short sentence, a real short paragraph, on why they should do this with you. If people don't know what you're doing, or if it's a very niche thing, it's going to be really hard to do, right? The advantage of it is you get access to a lot of people, and you don't have to do the servicing aspects of it, deal with lawyers, deal with the SEC, deal with all of that stuff. A lot of them, you can pay extra for them to do the filings for you. So if you're a smaller business to start, right, you're running super lean, especially like if you're a software business, they will do the SEC filings for you. You don't have to have a huge accounting staff or pay an accountant to do that every time that you have to file, because every time someone purchases from you, right, you have to file that with the SEC so that the SEC knows that you have investors that have purchased stock from you. So it's super important that you know what the differences are with that, and what the advantages and disadvantages are on the different approaches. And a lot of that has to do with what you're trying to raise capital for. Some approaches are better than others. Then the other part is who you're marketing to invest to you. Because people think about investors, but they don't think about how to market to them. It's hard to find them unless you're going, even if you're going to VC, you still have to sell them on it. Any thoughts?
I mean, I don't know too much about this space, but how do you even go about like kind of, getting in front of these people outside of the marketing? I mean, is there a lot of relationship building? Is it a lot of, like networking? Is it all the above? What are the ways to really kind of, I guess, once again, kind of just like stand out if maybe you don't have all of the, advertising, marketing in place? I mean, how much is a relationship and networking kind of factor into it? Or is it, proof of concept, like you kind of mentioned, is that kind of more so outweigh some of like the marketing tactical stuff?
So let's attack this through the lens of the 506B, right? So the 506B is one where you can't market, right? It's only a vehicle for people to invest. So in that situation, it's a combination of things. Definitely network, right? Networking. Finding people on LinkedIn, finding outlets, finding companies, right? And then asking the question from those people, if they're not in the market to invest, et cetera, asking for people that may be interested in this. Because a lot of times, they may not be investing in that particular thing that you're offering. But they may, they typically, it's a small world really for them. And they'll typically know somebody who would be willing to invest in whatever it is that you're offering, and it is in that niche. Now, there's also companies that you can pay for if you can advertise, right? That have lists of investors that are part of these investors that you can actually email market to, right? So they'll send emails on your behalf to their closed network of investors. But again, all they're doing is sending an email. It doesn't mean that you'll actually have it. Now, whether you have marketing or you don't market, there's a few things you need. One, you need to have a well-baked business plan, right? So that means you can show, over time how you're going to be a success. You're going to have a SWOT in there and start with a SWOT. What are your strengths, weaknesses, opportunities, threats? Big thing is you want to say, hey, look, I've thought of that and why that's a problem. Financially, a lot of people have great ideas, but they're not great business people. So make sure you have someone who's a business partner with you that understands how to put together a P&L, right? And a P&L over time. It's not just the one, right? You want to at least have enough of a P&L that's out there where you're showing where all the revenue is, where all the cost is, detailed, right? Not just, hey, I'm going to spend $60,000 on travel. Okay. Well, why are you doing that? How are you doing that? How are you spending it, right? Investors are going to want to know that. You're also going to want the balance sheet. So something people don't think about is the actual balance sheets, because the balance sheets show what their investment's going to be worth at the end of, when at the first year, second year, third year, right? So you're going to want the balance sheets. So you're going to want financials. You want to have a solid business plan. In that business plan, you're going to want to tell people who's involved, right? Are you just some no-name, college kid in Stanford that's sitting in their room, writing code all night, or like the Bill Gates type, right? That just wrote code while they were in school? Or do you have a network of people that are involved that have experience in these things, right? So like, for example, one of my ventures, we made sure to have someone who was nationally recognized for whatever it was that we were working on that does that. I can't talk about it yet, but I will soon. You got to have me. I've got to justify, hey, why should I give this person my money? And then, you've got another person that's involved, and all the people along that chain, they need to understand who they're dealing with. The people that have demonstrated the skill sets needed to make it a success in the past, it's important. Make sure you're telling that story, right? And then I always recommend having a one-pager. So a one-pager, before you get to a business case, a lot of these investors, they have people approach them all the time. If they have them approach them all the time, there's a ton of people asking, you need a one-pager to be able to wet their whistle, right? To be able to say, hey, of all the people that you've seen that have sent you stuff, this is what makes the most sense, or this is why you should investigate in this further, because they've got money to spend. But they've got a ton of money that want a ton of people that want their money. It's like, if you win the Powerball, all your relatives are going to ask you to like pay off their mortgages, right? So, or loan them money. So I don't recommend, you got to be really careful with loaning money to family. But at the end of the day, who looks best, who's going to wet their whistle the most. What they're going to be looking for is return on investment, right? Who's involved? What is the basics of the business case? Does it make sense? And, what your offering is. In other words, what do they get for their investment, right? And so you want that one pager. You need it to look professional. Don't do it on PowerPoint or Word or anything like that. Have a professional company do that. We actually do it for other companies too. We did it for ourselves, like my marketing company, right? We did it for ourselves, but for some of our various businesses, but we also do it for other companies. So make sure you have that. And then make sure you have a presentation ready, because basically you want to have the conversation before you get to that stage. So, solicit, find those people, network, always ask, because there's always someone who knows somebody, right? Have an NDA ready, because anybody that you talk to about this needs to have an NDA to protect your idea so they don't go do it. You don't get Edisoned, right? Tesla and Edison, if you guys haven't heard that story. And look it up if you haven't. We don't have time for it on the show, but look it up. And, you have an initial conversation or find out someone who does, then you have to have the one pager with the NDA so that they have you set the stage, you do the presentation in a PowerPoint, and then you have a full business case ready for them, so that if you've gotten them all the way down that sales funnel and they're serious about it, you look like you've done your homework. You've got your financials. And that's the big thing you hear all the time. Everybody always says to me, you guys are so prepared. Well, yeah, we've done this before. We want to show you that we're not just protecting our investment and time and effort into something that's worthwhile. We also want to protect yours. So we're asking you, right, to trust us with your money so that you're going to make more money. If I'm going to do that, I'm going to put the level of effort to make sure that I've really gone through it. And if anybody has any questions about that or whatever, or needs consulting or is interested in marketing with that, how to do that, or actually provide the materials, my family suite, tribe, whatever you want to call it, of companies can provide that for you.
That's interesting. So kind of about the platforms that, obviously in our marketing business, we are sometimes impacted by, changes in algorithms or, Facebook making updates to their policies. How much are, people that are using, like GoFundMe or any of these platforms, how much are they at the mercy of the policies or changes in the platforms? I don't know if these platforms use any sort of algorithms or anything like that, but I mean, how much does that impact a potential campaign, the actual platform itself making changes and whatnot?
So are you talking about from a marketing perspective, or are we talking about from the actual use of the platform itself?
I mean, both really.
Okay. So let me tackle the platform perspective first, right? So the platform, by and large, is not going to change other than if the SEC changes a reg. So part of the reason you're doing business with them is because they have the legal support to do that work, make sure you're keeping yourself compliant, and you've got a backup for that. And they do this all the time. So they're collecting, pre-filling, and making it easy to do, right? So from a regulatory perspective, they're taking care of all of that for you. So it's their job to keep up to date. As far as from a technology standpoint, one of the things that I always say before you partner with anybody, you need to do due diligence on them, right? Understand what their ratings are. Look at them on the SBA. Ask for some folks. If you're going to part me with $30,000 or $50,000 of my seed money when I don't have a lot of money and no revenue coming in, I'm going to do my homework on you, right? I'm gonna look at the ratings. I'm going to, also ask them, how are they protecting, the security, because you're collecting people's social security numbers and all of this stuff as you kind of, move along, and they're processing these applications for the stock purchases, because they have to provide dates of birth to the SEC. They have to provide, social security numbers. So do your investors a favor and find out what their security looks like, right? Is this someone that's SOC 2 certified? Ask that question, right? And ask for their due diligence as you would for any other company to say, hey, I want to co-brand or put my personal brand with you, because if they screw up or they leak information, that's going to be massive with regard to the ultimate success of your potential product, right? So remember, these are co-branding. You're white labeling with them, essentially. You want to make sure that they have a secure platform. As far as the marketing is concerned, with the marketing, you're going to want, if you're getting the marketing through them, there's two ways that I'm going to say this. You're marketing to the masses, right? So the population. You're going to want to have some examples of people that were success stories. You don't want someone who, is going to take your money and don't have anybody that you can refer to. And they need to have done this for folks that have the same raise goal as what you do, right? So if you've got someone who's trying to raise, let's say $15 million or $100 million, right? There's a big difference between 15 and 100. There's a difference between 15 and 500,000. So make sure these marketing companies, whoever they are, have that, and they have done it within a reasonable amount of time, because you're going to pay for their marketing $15,000, $20,000 a month. Have they reached their targeted goal, and when did they reach your targeted goal? If it's $1 million in a year, right? When did they reach that? Did they reach that within 6 months, or did they get the full $15,000 a month for the full year before you reached your targeted goal? So make sure you have some examples on there, because that's a huge difference in cost. You can cut it 50% off, 50%. Now they're probably going to charge you more on the front end because they're better at it than other people, right? But do the math, because there is a possibility, just like any marketing, you put all the marketing efforts out there, and either your product sucks or your idea sucks or something else sucks and it just doesn't work. And then you're spending all this money on marketing and you're not getting anything for it. Right?
Yeah.
So making sure that you're doing your homework on that. And then as far as the platforms are concerned that are marketplaces, right? Make sure you see how many they've funded, how many they've, what's the average size of the fund, the raise that they have out there, how many are in the marketplace, and then how they highlight you with regard to the investors themselves, right? And pay the money up front. Anything that's going to help you get in front of an investor, it's usually cheaper on the weekly or monthly than it would be to go out there and do some of this other stuff, because you're trying to reach more investors. But at the same time, make sure that you're looking at it from a perspective of, these are the people that we have. These are the people that are going to invest. These are the people that, we're going to be able to take care of. And these give me the best chance and the biggest opportunity to get in front of people in a way that makes sense for me. Sometimes it's algorithm based, like, okay, you just started on the platform. So, like YouTube, we're going to give you a boost for the first, 2 or 3 shows, right? Or the 2 or 3 months. Then you kind of peter off and you have to pay me some extra to get you to bump back up to the top of the investors that are looking again. How much can they segment, right? We always talk about targeted emails and targeted marketing, right? The better you target it, the more likely it is you're able to find the person that you're looking for that's going to be able to invest, right? So as they're marketing to their internal investor group, how much can you, as the user and the person that's offering, target those specific individuals, right? And then lastly, make sure that in general, that you understand the brand value of the user base. So for example, if I'm doing a smaller raise, I'm going to use like GoFundMe. And, if I don't have any seed money, I'm going to use something like GoFundMe, because it's 39 cents. Yes, it's 39% of what you raise, but it's 39% of what you raise, and not you're paying that up front to even get it out there to people, right? So for someone who isn't out there, it costs you more in the long run, but you're able to get yourself out there to be able to be found and raise some funds, whereas the other way around, you may not be able to afford to. So does that answer your question?
Yeah, it does. I mean, I think what's cool about, I guess, all these platforms, but like when I think of like GoFundMe, is like the community that kind of gets built around this, like supporting, businesses or individuals. You're really fostering some support and loyalty, and it's nice that it can kind of drive that engagement with these platforms on a bigger scale.
Yeah, there is a marketing aspect to it because you're building users already, right? So you've got users before you even created the product, right? You got people that are going to pay before you get the product, right? You've got people that are going to that are proud of, hey, I just bought into this XYZ, right?
Yeah.
And then they're going to tell people. There's a guerrilla marketing aspect to it, right? They have ownership in it, so they want you to succeed. So they're going to tell other people, and you can ask them to leverage their social media on your behalf as well. So yeah, there's absolutely an aspect of guerrilla marketing that's involved with that kind of stuff.
Very cool.
All right. We're getting to 58 minutes and 12 seconds, and I've talked a lot. And you notice I haven't drank anything this time because I've had to talk too much this time. So, yeah, so no opportunity. Alan, did you have any other questions about this topic before we leave it for this week?
No, I think it's really interesting as a potential option. I mean, I know it's been out there for a while, but I think it's a great topic to discuss. I mean, obviously there's, no guarantee of success here, like anything in life, but there's a lot of time and effort that goes into it. But I think it's a great way to access, capital and get some early adopters, some early advocates. So I think you did a great job explaining all the different elements that are needed to really make it work.
Yeah, I think, everybody traditionally, right, has not really thought about crowdfunding as an opportunity for larger scale investments, right? They think about the GoFundMes for XYZ who's having a medical issue, or, house burned down or whatever. And that's great. That's great that it's there for people. That's the donation aspect of it. But there's more to it than just that. And it's an opportunity for people, and more importantly for me, especially folks that are getting out there, is an opportunity for me not to have to pay a lawyer, me not to have to do background checks, me not to have to make sure that people are certified, or accredited, investors. Me not to have to sit there and every time, because you have to report it to the SEC within 15 days. I don't have to deal with it every time I get somebody else. I can just talk about the product. I can say why you should be doing this. You know what I mean? Why you should go along this path with me. Why it's important. Why you're going to get a good ROI on that. I'd rather focus on that and creating the product and getting it to market and let someone else process all the legal paperwork without having to pay a lawyer who's going to be a lot more expensive.
It makes you wonder how many companies, 20, 30 years ago that could have benefited from this, that, went the traditional route and couldn't get funding and maybe could have blown up if this had existed back then.
Yeah. It's all about the entrepreneur and empowering the entrepreneur, right? We had the gig economy. That was a big thing. You had the internet that came up and online sales, right? That was a big disruptor. Then the gig economy was a big disruptor. And now you have access to capital. Again, anyone can be an entrepreneur if you have the persistence to see it through. And that's what makes the difference for people, is the ability to learn and stick around long enough to make it worthwhile. Most people give up.
Fight through the adversity, fight through those ups and downs, because it's
100%. Yeah, absolutely. And they don't stop. Celebrate the good times like it's like the old Prince, was it Prince? I think Prince's song, like it's 1999, right?
Yeah.
So
exactly.
Celebrate it like it's 1999. I actually did celebrate 1999 at UCF as a freshman.
Oh man.
With some with some ATO folks. I was smart enough as an engineer to understand that I could not do something like Rush at the same time as learn how to be an engineer. So they did that for me, and I just got to party with them. So, the bottom line is celebrate the highs. They do come, they're extremely rewarding, but the rest of the time it's constantly dealing with crests and waves. And it's just like life. But, and I don't use but, those crests and waves lead to a payoff. And that's why entrepreneurs work harder than anybody who works for someone else. So
absolutely.
That's all I've got for this week. Alan, do you have anything else that you kind of want to chat about?
No, I think that was a great episode. Learned a lot, and I hope everyone else here, learned it. If you're going through that entrepreneurial highs and lows, and you just learned a new way that you could maybe gain some capital, or at the very least put it in your future plans, and know that this is an option for you now.
If you're at UCF and you're a student like Jesse Wolf was that was on the show, or you're part of the incubator program, right? This is a path for you to make some money to help you get along the way.
Absolutely.
Jesse talked about a lot of that stuff. This wasn't available in 2015, when Jesse was trying to do it. He did it all on his own. So, if you have dreams, if you're in the incubator program, if you're a UCF student, if you're in corporate life and you're trying to raise money to be able to do something on your own, this is a path to do it. Just trust and believe in yourself. And as they always say at UCF, reach for the stars. So,
words of wisdom.
All right. So that's it. Alan, if you want to tell people where to find you and how to get to you and what you do.
Sure. As you guys know, my name is Alan Levin, founder of Smarty Pants with a Z Marketing. We do all things digital, but we really try to focus on lead generation through advertising, websites, SEO, some of the things we mentioned today on this podcast. If you're looking to find me, you could connect with me on LinkedIn or at alan@smartypantsmarketing.com.
With a Z.
With a Z.
With a Z. There you go. All right. He usually has his background up, but apparently he and Noah are cohabitating right now. So I'll bring Noah back onto the screen. Noah,
I got this house.
I'm going to add you back to. I'm going to add you back to the stage. Real quick. You're a UCF student. You're also, you're doing an internship here. If people are interested in potentially working with you, how can they find you?
LinkedIn. Primarily where I can be reached for sure.
What's your LinkedIn handle?
Wasn't ready.
Probably just first name dash
Yeah.
last name. here, one of those.
Yeah, sure.
Yeah,
So he'll have it ready
really
for
just
us
know
next
what we-
time. See, I kind of put him on the spot a little bit. He's learning.
Yeah.
But never miss an opportunity to be able to brand yourself.
Or
Noah.
UCF email. There's still the ucf.knights.edu, I believe.
They changed it, didn't
They
they?
changed it, actually.
Oh,
Yeah.
wow.
Now it's our student number as well as the ucf.edu. So.
Oh, wow.
Yeah, they changed that recently because a lot of the old emails got canned, so to say. So they put some messaging out about that. They turned off a lot of old emails. I think Trey said his email got shut off too. Trey Neal, who is a partner on our other show, the Knighted One. So if you like sports, come visit us there too. Which Noah is also going to be producing there. So he's learning the ropes on the professional world and also the sports one. So that's all for us this week. For all your marketing needs in small business, legal, medical, and higher education, any type of video production needs that you need from A to Z, including 3D animation and VR XR, you can reach out to me at r.phipps@sevenlights-agency.com. You can also visit our website at sevenlights-agency.com for your consulting needs. You can reach me at bossleadershipsolutions@gmail.com. And for anything in between, you can find me on LinkedIn on Roger Phipps MBA. And that'll be a wrap for this week. So thank you guys for everything. Thank you for joining the show. Hopefully Josh Lazar will be back soon. And always like, subscribe, and grind. All right, guys. Thank you so much. We'll see you next week.
See you next week.